Welcome back to the Malaysia Money Matters show. It's the 16th of May, 2025.
Good to be back.
Today, we're diving straight into the latest financial news affecting Malaysia and the wider world, too. We'll keep it brief, tell you what's happening, and what it actually means for you.
Let's get straight to it.
Right. Starting with Malaysian companies. First up, 99 Speed Mart. They've announced a really strong first quarter.
Yeah, their net profit is up quite a bit, over 7.5% compared to last year. RM 143 million.
And what's driving that?
It looks like stronger retail sales, plus they've been, expanding their network, opening more stores.
Makes sense. Revenue's up too, around 7.6%.
Exactly. And they've declared an interim dividend, 2.25 cents per share.
Yeah.
That's about RM 189 million going out to shareholders, payable June 9th.
So good news for investors there, and they seem well funded.
Oh yeah, sitting on nearly RM 780 million in cash and bank balances at the quarter's end.
And they're still expanding.
Yep. Plan is for a new distribution center in Cyberjaya, meant to be ready Q2 this year. Should help with growth and bulk sales.
So overall, a strong start for them. Growth in sales, network, and profits.
Definitely. The new DC suggests they're looking long-term too. Shares reflected some of that, up almost 1.8% at the close.
Okay, let's shift to construction. Aneka Jaringan.
Right. They secured a pretty decent contract. RM 50.54 million.
What's it for?
It's for earthworks, piling, substructure works. Basically, the groundwork for a new apartment and hotel development. Big one in Jalan Sultan Ismail, KLA.
How long's the project?
18 months. Kicks off June 2nd this year. Expected finish around December 1st, 2026. It's a proposed 62-story building, so quite significant.
So that adds nicely to their order book, gives them revenue visibility?
It certainly does, though interestingly, their shares actually dipped a bit, down nearly 4%.
Maybe just broader market stuff.
Could be. Or maybe other factors specific to them investors are weighing up.
Oh.
But the contract itself is positive news.
Okay. Now, Bintai Kinden, some interesting news here.
Yeah, quite a turnaround story potentially. Tenaga National, TNB, they've reinstated 3 contracts.
Contracts they canceled before.
That's right, terminated 2 years ago. Seems like negotiations worked out.
Why were they canceled initially?
It was linked to Bintai Kinden's financial troubles back then. They've since got approval for their regularization plan, private placements and so on.
So TNB feels more confident now.
Seems that way. The contracts are for defect clearance at power stations. Grik, Subang Jaya, Kuchai Lama. It's a positive signal for their recovery. Shares closed unchanged, though.
Right. Onto Dialogue Group, oil and gas services.
Okay, their latest quarter, January-March, showed a drop compared to last year. Net profit down about 13.6%, revenue down 17.6%.
Reasons.
Lower oil prices played a part, and also less international activity after they divested their stake in Saudi Arabia.
But there's a nuance here.
Yet, while it's down year-on-year, this quarter was actually an improvement compared to the previous quarter, which saw a net loss. So maybe things are stabilizing or turning around sequentially.
They declared a dividend, too.
They did. 1.3 cents per share. Their focus now seems to be more on Malaysian upstream activities, expanding Pengerang, and being selective on new contracts.
And the market liked that. Shares were up almost 3%.
Seems so. Suggests investors see a path forward despite the year-on-year dip.
Okay, let's talk pharmaceuticals. Duopharma Biotech.
Record high net profit for them in the first quarter. Jumped almost 68% year-on-year to RM 25.6 million.
Wow, what fueled that?
Strong sales across the board, especially insulin, apparently. And also, the prices for their active pharmaceutical ingredients, the APIs, have normalized, which helps margins.
Revenue growth was strong, too.
Very strong, up over 36%. No dividend declared for this quarter, though. They sound pretty optimistic about the domestic market, but keeping an eye on global uncertainties, naturally. Shares were up over 2%. Highlights a strong performance, definitely.
Next, Fibermat, Geotechnical Solutions.
Big contract win for them. RM 283.5 million.
For what project?
They're a subcontractor for road construction works on the Central Spine Road in Kelantan.
That's a major infrastructure project.
Absolutely. It's a 24-month project, starting basically now, running until May 2027. Really boosts their order book and fits their strategy to grow in infrastructure. Shares held steady.
Right, LBS Bina Group, property development.
They're partnering up with Oriental Holdings for a huge project in Klabang, Malacca.
How huge?
Massive. RM 7 billion, estimated GDV, mixed-use development over about 561 acres.
Long-term plan.
Very long-term, phased over 15 years. aiming for industrial and commercial components within that new waterfront economic zone.
Oriental owns the land.
Correct. They'll get a significant slice of the GDV as the landowner. For LBS Bintai, it's a major expansion into Malacca.
Market reaction.
Both stocks were down slightly, LBS about 1%, Oriental less than 0.5%, but it's a very long-term play, obviously.
Okay, MN Holdings. Engineering services.
Another contract win, RM 37.9 million, building a waste-to-energy interconnection facility. Client wasn't named, just Company A in the central region. Project runs until March 2027.
Interesting sector, waste to energy.
Definitely growing.
Yeah.
And Maybank Investment Bank just started covering them with a buy call. They see potential linked to the energy transition and industrial growth.
So, good momentum there.
Looks like it. Shares jumped 6.5% on the news.
PJ Boomi next, also oil and gas related.
Yeah, their subsidiary, PJ Boomi Heavy Engineering, has an agreement with a Chinese firm, Intlef Oil and Gas Group,
What's the agreement for?
to potentially supply onshore drilling rigs. PJ Boomi will issue purchase orders later with specifics.
So this signals maybe an expansion or shift in their business?
Could be. Gearing up for more onshore work, perhaps. Their shares were untraded yesterday, closed at 97 cents the day before.
Okay, Samchim Holdings, chemical supplier.
Not such great news here. First quarter net profit dropped quite a bit, down 34%. Revenue also down slightly.
Why the drop?
They're citing soft margins, basically. Lower average selling prices hurting them.
Outlook sounds cautious.
Very.
Yeah.
They see a challenging environment for the rest of 2025. Global trade issues, currency swings, industry oversupply, lots of headwinds. Only their Indonesia market actually grew. Shares dipped over 1%.
All right, a big one now, Sapura Energy.
Yes, they've unveiled their proposed regularization plan, the big plan to get out of PN17 status.
What does it involve?
It's pretty drastic. A 99.99% capital reduction, for starters, and a major debt restructuring to slash borrowings down to just over RM5 billion.
Wow. Any new major players coming in?
Potentially, yes. The Ministry of Finance, through Malaysia Development Holding, looks set to become a major shareholder, over 33% stake after a planned RM1.1 billion capital injection.
So a government-backed rescue.
Essentially, the plan aims to sort out RM12.1 billion in total liabilities through debt conversions, equity-like instruments, even a debt waiver. Some major banks, Maybank Islamic, CIMB, RHB Islamic, could also end up with substantial stakes.
This is critical for them then.
Absolutely critical. A massive effort to fix their balance sheet and, hopefully, return to profitability.
Yeah.
Shares were unchanged at 4.5 sen. Guess the market's digesting this complex plan.
Okay, Sunway REIT, Real Estate Investment Trust.
Doing very well. Climbed to a new record high.
Why the surge?
Strong first quarter results. Net property income up 20% year on year. Revenue up nearly 23%. Driven largely by new asset acquisitions.
Retail performing well.
Yeah, the retail segment is strong, and they're expecting positive rental reversions, meaning they can charge higher rents when leases renew. Plus, that acquisition of Aeon Mall Seri Manjung should complete in Q3.
So positive outlook driving the price.
Seems that way. Unit price closed at RM2, up over 3.6%. Strong performance, strategic growth, looks good for them.
And finally, for Malaysian companies, YNH Property.
Right, this connects back to Sunway REITs. YNH is the one selling the Aeon Mall Seri Manjung to Sunway REIT.
And there's an update.
Yes, they've extended the completion date for that sale by 4 months to August 20th this year. Some new conditions related to updated certifications.
Still expecting the deal to go through?
They are. They expect to gain about RM12 million from it, which they plan to use to repay loans and boost working capital. Shares were down just over 1%. So, a bit of a delay, but should still happen.
Okay, let's broaden our view now. International news. Starting with APEC.
Right, the Asia-Pacific Economic Cooperation Group. They put out a warning. A sharp decline expected in trade growth for the region this year.
How sharp?
Just 0.4% growth predicted, compared to 5.7% last year. Big drop.
Main reasons.
Lower external demand, basically fewer people buying stuff globally, and specifically the impact of U.S. tariffs. They've also cut their regional economic growth forecast for this year, down to 2.6% from 3.3%.
So trade tensions really biting.
Seems so. APEC's policy director directly linked the downgrade to the U.S. tariffs, impacting goods, services, and even financial markets. It highlights how interconnected things are.
What about the EU and trade?
Well, there's some growing optimism over there about maybe reaching a deal with the U.S. to ease tariff hikes, especially after the U.S. seemed to de-escalate a bit with the U.K. and China recently.
But they're still cautious.
Naturally. They want to make sure any deal actually benefits the EU. At the same time, they're watching a surge in Chinese exports to the EU. China's trade surplus with the EU hit a record in the first 4 months of the year.
Concerns about dumping.
Yeah, worries that Europe could become the destination for cheap Chinese goods, especially with the ongoing U.S.-China tensions pushing those goods elsewhere. It's a complex balancing act for them.
And speaking of U.S.-China, tensions still simmering.
Definitely in the tech space. China accused the U.S. of unilateral bullying. This is after the U.S. said using Huawei's AI chips anywhere violates U.S. export controls.
Even after that temporary trade truce in Geneva.
Exactly. Shows that while broad tariffs might see some de-escalation, the tech restrictions are still a major point of friction.
How's the U.S. economy looking amidst all this, the Fed's stance?
The Fed is holding interest rates steady for now. They're trying to get a clearer picture of how President Trump's tariffs and all the trade talks are affecting inflation and the economy.
What's the recent data saying?
It's a bit mixed. Consumer prices didn't rise as much as expected, which is good, but core inflation is still above their target. Producer prices actually fell unexpectedly in April. Maybe companies are absorbing some tariff costs.
And consumer spending.
Retail sales barely budged. Could be. Consumers are starting to pull back a bit. Plus, there are reports the U.S. might be preparing to cut capital requirements for banks. So lots of uncertainty. The Fed's being cautious.
Okay, shifting gears. U.S. President Trump and Iran. A deal close.
Trump stated they're close to a nuclear deal, said Tehran is sort of agreed. But an Iranian source apparently indicated gaps remain. So mixed signals.
Impact on oil.
Oil prices fell on the news. The possibility of sanctions easing on Iran means potentially more Iranian oil hitting the market. Talks are ongoing, but sounds like disagreements persist.
Right. What about overall oil demand? The IEA's view.
The International Energy Agency predicts global oil demand growth will slow down for the rest of 2025.
Why slower growth?
Partly economic headwinds, the general slowdown, but also record electric vehicle sales are starting to make a dent. Meanwhile, oil supply is expected to increase, mainly from planned OPEC plus output hikes.
So potentially an oversupplied market?
That's what the IEA suggests. They've revised up their 2025 supply growth forecast, expecting more from Saudi Arabia especially. Could lead to a surplus. Lower prices are also apparently slowing U.S. shale growth and hitting Russian oil revenue.
Interesting dynamics. What about gold?
A UBS strategist thinks gold might retest its record highs before the year ends.
Based on what?
Global macroeconomic uncertainty, mainly. Plus, expectations that U.S. interest rates might eventually come down. All the worries about tariffs, inflation, geopolitical risks. It makes gold look attractive as a safe haven.
So, potential for more upside?
They see possible short-term consolidation, but project a rebound to maybe U.S. $3,500 ounce by end 2025, even averaging $3,600 by Q3 2026. Highlights gold's role right now.
Okay, just touching on political news briefly. Malaysia-Japan ties.
Yes, some positive developments there. They signed 3 green bioeconomy agreements at the Expo 2025 in Osaka, worth about RM1.34 billion combined.
What kind of agreement?
Focus on renewable energy development and commercializing sustainable biotech products. Aligns with both countries' green goals. Strengthens that partnership.
Right, that covers the main news points. Let's wrap up by discussing what really stands out today. What's maybe the most exciting or impactful piece of news for our listeners, for you?
There's a lot there. Sapura Energy's plan is obviously huge for them, but many quite complex for the average investor right now. The big contract wins for Fiberout and MN Holdings are significant too.
Yeah, good points. For me, considering the immediate impact and maybe broader signals, I think that 99 Speed Mart story is quite interesting.
Their strong performance?
Exactly. The profit jump driven by actual sales and expansion, plus the dividend payout. It shows resilience in domestic retail, puts cash in investors' pockets, and their expansion plan. Well, it signals confidence for the future.
I'd agree with that. It's a solid story of operational success, translating directly into shareholder value and future investment. It reflects positively on consumer spending here too, perhaps. It feels tangible.
Yeah, tangible is a good word for it. Okay, that brings us to the end of today's deep dive into the money matters shaping Malaysia and the world.
We hope this gave you a clear, insightful overview of what's moving the markets.
Absolutely. And don't forget to subscribe to the Malaysia Money Matters podcast. That way you stay informed and, hopefully, ahead of the curve.
We'll be back soon with more key financial news and analysis. Thanks for tuning in. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at mmoneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.